gives you the confidence. It's kind of gained those averages and trying to trade above them. So I think I'll give him those numbers. Now the levels that you need to watch out is around 295, 294, where all the longer term setups are placed. So I think as long as we are staying above those numbers, I think within the short term, and when he's looking at short term, my definition of short term is 0 to 3 months. So anywhere between 0 to 3 months over the next 90 days, he should possibly look for targets in the region of around 335, 340, and he should be definitely keeping a watch at 295. So below that, if it closes 295 or below, then I think he should exit for the time being, because then again short-term weakness will return back into the stock.
Absolutely. And Mahesh, I'll come to you now on the fundamental aspect. So how do you view Power Grid's revenue visibility with the ongoing capex plans?
I think Power Grid is a good buy from current level also. If you are looking from a longer term perspective, we can see some more upside from the 360 to 375 level from a 1 year horizon. From profitability and by expansion, if you're looking on a Power Grid, that's a good buy, I think.
Understood. Now let's go across to another query that is written to us again on WhatsApp. So Angel has written to us from Mumbai saying he's bought 1,000 shares of Hudco at 217 apiece. Currently, it's around 234, and he's looking for both fundamental and technical outlook on it. So, and how much can be the target price for both short-term and long-term is what Angel is inquiring. And what I can see on the screens is that he's sitting on a profit of over 14,000 there. So firstly, I'd like to take a fundamental view on the counter. So Mahesh, how strong is Hudco's loan book growth in the infra and housing segments?
I think Hudco is a place good, but if you're looking for a longer term horizon, then it's okay. 260, 275 we can see. But your horizon is a very short term, then you should at least book 50% partial profit booking here also. And the rest is should be kept for the 260, 275 zone.
Understood. And Sarvendra, what are the charts suggesting about, of Hudco? Because, if I look at the charts here, and currently, if I can see at what price it's trading at.
So we are around 231 right now.
We are around 231. So what are the charts suggesting, Sarvendra?
See, the silver lining here is that possibly his buy price, that's a clean breakout on weekly setups. If you look at that, was a clear defined swing high on the weekly setup. So we stayed 2-3 weeks below that number, and once we have crossed that, I think the short-term momentum also picked up. So again, I'll tell him that yes, within the short term, you're definitely looking at some good momentum here. The stock has also been able to manage, just like the previous query that we had, that it's above its long-term setups, long-term averages. So I think all that is converging around that buy price, or slightly higher, in fact. So I think 216, 217 good support areas. I think 215 is his buy price. I would say he should be staying put for, again, the short term 0 to 3 months. I think he should be staying put within this trade with his cost as his trailing stop loss. So around that cost area, 1 or 2 rupees slightly lower from there if he wants to get his to give him some more time in this trade. I think he should keep his cost as a trailing stop loss somewhere thereabouts there, and possibly I think 245, 250 is doable here immediate. I think week to 10 days. 10 working days odd. And if we clear that 250 psychological barrier, I think we should be heading towards 265, 270 over the next 1 to 3 months. And for the longer term also, if he's asking, I think as long as it stays above the long-term average, again at around placed around 215, I think broadly he could hold till then, and then within the long term you could still look for higher targets around 290, 300 also is doable over the next 9 to 12 months.
Absolutely, Sarvendra. Thanks for that view. Now, let's go across to another WhatsApp query. But before that, a quick reminder for our viewers. Viewers, this is your chance to get all your stock-related queries answered. So what are you waiting for? Please pick up your phones and call us right away. The numbers are there on the screens. And with that, Pramod is writing to us from Kerala saying that he holds 300 shares of Greaves cotton at 246 apiece, and currently he is sitting on a loss of over 12,000. So what he should be doing, whether he should be holding or exiting, he hasn't mentioned the time horizon. So I'd like to take both fundamental and technical view on Greaves cotton. Mahesh, I'd like to take your fundamental view first. What's your outlook on the company?
I think upside is limited in Greaves cotton. That could be a 250 260 zone. So I think if any upside, he should try to exit on a higher level. That could be a 250 260 zone. From current perspective, we can see some more consolidation on these levels. But yes, 250 260 could be exit level for him.
Understood. And Sarvendra, is Greaves cotton forming a base or losing momentum?
See, I think the cuts are brutal here. A 30-40% cut in a very short span of time is what I can see. So the quarterly setups are totally, I think those candles, those setups are looking slightly bearish. So my view also would be a sell on rise on this one. So he'll possibly as close to his buy price if he gets that bounce. Luckily, if he gets that bounce. So I think what I can see is that within the 1 to 3 month horizon, around 230, 235 is doable, but the stock is already trading its long-term averages, but slightly below that. So pulling back into that area, I think fresh momentum or fresh life into the stock will only come about 210. So over the next, I think, week, 10 days, he should be looking at that number. I think this stock has to clear 210 to show more strength towards 235. Beyond 235, I'm afraid I can't see any visibility right now. So he should be keeping that in mind and possibly trading accordingly.
Understood. Thanks for that view. Now, another WhatsApp query. Shinoj is written to us from Kerala saying that he holds 300 shares of Amara Raja at 1293. Again, he hasn't mentioned the time horizon, but the stock has fallen down. It's currently trading at 1010. And he is sitting on a significant loss of over 84,000 is what I can see. So first, I'd like to come to you, Sarvendra. What is your outlook on Amara Raja? How is it faring on the charts?
See, I think again, the brutal cuts here, and I think the way it is trading right now, I think you could still slip more. So I think I would say that around the 52-week highs were around 1800 is what I see. Right now it's trying to kind of build a base around that 950,000 mark. So what I can say is to give some more time, and now he's already such deep cuts that he has to wait for a bounce. I can't give him a very clear take right now, but I think wait for a bounce and then take a view maybe 15-20 days later is what I can tell him right now. No clear setups which I can see on charts.
Absolutely. And Mahesh, talking on about the fundamental aspect of it, so given the decline in operating profit margins to 12.4% in Q3, so what's your outlook on Amara Raja? Are you positive on the counter for, let's say, for another next 1 to 2 years?
I think stock is beaten down from higher levels. So it's a consolidation zone. Any positive trigger could be, we can see some more upside up to 1,150 or 1,200 level. That level could be he should try to exit on the same. We're not much more bullish on Amara Raja, and we have earlier also suggested on higher level the profit booking. So he should try to exit on a higher level. I think 1,150 and a 1,200 level kept for a upside for a Amara Raja.
Understood. Thanks for that view. And both our fundamental and technical guests are not that positive on Amara Raja. And we have a WhatsApp query from Smriti Sharma. She holds 40 shares of ATGL. She bought it at 940. And she's asking whether she could average at current price. And currently it's trading at 626. And she is sitting on a loss of over 12,000, almost 13,000 there. So again, she hasn't mentioned the time horizon, so I'd like to take both fundamental and technical view on it. Firstly, I'd like to come to you, Mahesh. How are the fundamentals of ATGL looking like? Are they promising?
The fundamentals are good. I think stock is the potential for a 800, 840 zone. So if anyone want to average, they can average on these levels also. Some upside potential in the stock. So after average that, they should try to exit on higher level. That could be 800 to 840 zone.
Understood. And Sarvendra, talking about the technical aspect of ATGL, are you positive on this company?
See, I'll like to pass this one because the reason I'll tell those deep cuts have not been kind of absorbed till now, and it's been a very tight range since the all-time highs at around 4K. So from there, I think broadly it has been trading that 1,000 to 500, 600, 500 band. So I think that's about it. 500 to 600 band has been the band that it has traded, but I have no clear view on this, so I'll give it a pass.
Understood. Good. And just a quick disclaimer for our viewers there. Adani Group, NDTV is a subsidiary of AMG Media Networks, an Adani Group company. With that, let's go across to another WhatsApp query from James. He's written to us from Germany, and he holds 100 shares of NCC at 235 apiece, and he's looking for both technical and fundamental view on NCC. Currently, it's trading at 218, and he is sitting on a very meager loss of over 1,000. But Sarvendra, on the technical aspect of it, do you see any positive momentum in the near term?
See, just like any high beta mid cap, the cuts have been sharp here, and a 360 plus odd kind of a stock falling all the way sub 200. That's always difficult to digest. But I think the repair work is on. The stock still trades below long-term markers, so those are placed around 240, 245. So long-term strength possibly would be coming post a break past 245, 250. But in the meantime, I think majority of the damage possibly is done at the low that we printed around 170, 175. So those areas would be important. Right now we are around 220. We pulled back, but my sense is that you would consolidate slightly more. So the repair process, the repair patterns, the technical patterns that we want to see, those are possibly, the green shoots are there, but not completely built. So I would say it will spend more time within this 180 to 220, 230 band over the next 3-6 months, and possibly set up a good reversal pattern and then possibly start to move up. But I think broadly, I think 90% of the damage is already done at 175.
Understood. And Mahesh, talking about the fundamental, aspect of NCC. So considering NCC's PE ratio, it's at 17, PB ratio is also approximately at 2. So do you view the stock as like fairly valued?
I think stock is fairly valued. Currently, we have seen all the stocks hammered in the last cycle of market. So the stock is consolidation from lower level, that could be that is 180 to 220 zone. After some more upside, I think at 225 to 228 is technically move would become a positive. So any upside moment 275 to 285, which is visible from a 3 to 6 month or a 9-month horizon, then investors should try to exit on higher level. Stock has a potential up to 275 to 85 zone. So they should try to exit on higher level. But yes, currently they can hold the same.
Understood. Thanks for that view. Now with that, we'll go across to another WhatsApp query. So Srinivasan has written to us from Pune. He holds 300 shares of Equitas SFB at 91 rupees, and he's looking whether he should hold or sell the counter. Again, he hasn't mentioned the time horizon, so I'd like to take both fundamental and technical view on it. Currently, it's trading at 70. He bought it at 91, and he is sitting on a loss of over 6,000. So, Sarvendra, I'll come to you first on the technical aspect of it. What are the charts suggesting?
See, one of the deepest cuts, whatever we have discussed, stocks discussed till now, this is one of the deepest cuts, almost a 50% cut from 120 to broadly sub 60. Again, within the year, whatever we thought that this kind of correction possibly comes in after a top in an even year, I think broadly we've done that number. So again, I would say 80-90% of the damage possibly could be done here. But I think again, to recover from such a cut, I think it will take that 2-3 months of at least sideways movement and consolidating, possibly in a range of around 60 to 80 odd rupees. That would be the take right now. So 60 to 80 could be a range for the next 1-3 months before possibly a meaningful reversal can happen. So I would say that he'll have to spend some more time here in this range. He has to have patience if he wants to exit this one in profit.
Understood. And he has to have some patience there, is what Sarvendra is suggesting. Mahesh, I'd like to take your fundamental outlook on this company. So in the small finance banking space, are you optimistic about Equitas, or do you have any other suggestions or options there?
We are not much more optimistic on a small finance banking space, but yes, currently all the small finance banking are the journey towards the upward side. So he can continue to hold, and on 80 to 85 zone, there could be he should try to exit from the particular stocks. So we're not optimistic for a small finance banking, but yes, some rally could be extended on the small finance bank.
Understood. Thanks for that. And viewers, a quick reminder again, the numbers are there on your screens right now. Please call us, pick up your phones and just ask away your queries. Our fundamental and technical guests are here to solve all your stock related queries. So don't miss this chance. And with that, we have a WhatsApp query written to us from Sunita from Hyderabad. She holds 50 shares of KFintech at 920 and she's looking for a short-term view on it. So if I look at KFintech, what the current price that it's trading at 1287 and was up in trade today also. So Sarvendra, what are the charts suggesting? Are you positive on this counter?
See, mid-cap IT is again a tricky thing. You are trading a high beta setup, and if you are looking at short-term in such names, I think you have to be very, very careful. So that is all I can tell him. But looking at charts, I think we were searching for pullbacks in every other stock, but this one has pulled back very, very nicely. So it has pulled back from all the way from 800 to almost 1300. So I think my view here is that possibly this pullback more or less has run its course. So again, a small correction possible here. So it's up to him if he wants to do something here. But I would suggest that the 1600 levels are strong hurdles here. Beyond 1350, within this leg, difficult to sustain. I would think that possibly exit and then possibly buy back at lower levels if possible.
Understood. And she is what I can see that she was sitting on a profit of over 18,000. Am I correct? If I can pull that chart up of Sunita. Yes. So should she be booking her profits, Sarvendra, or should she stay invested?
There are two options. Whenever you are in profit, there are two options. Either you trail your stops in profit, or possibly look at booking completely. So since it's a trading mindset is what I get from here.
Yeah.
So within 1 to 3 months, I don't see any extraordinary more returns coming in from here. So she has an option to book. At least she should book 50% of profits, and if she wants to stay in the remaining positions, she can use the psychological 1000 mark as a trailing stop loss and try and maybe get another 50-100 points of juice if it is left. But broadly, I think the highs that we printed at around 1320 odd. Beyond that, I think maybe another 80-100 points is what could be left. So if she wants to time that, fine, but she should book some profits here.
Understood. So Sunita, if you're listening to us right now, our guest is suggesting that you should be booking your profits currently. And with that, we have a WhatsApp query from Sanjay. He's written to us from Kolkata and he wants to know future prospects of Avantel. Bought 1000 at 146 levels. Currently, it's trading at 133. And he bought these shares 7 to 8 months back. And in just 7 to 8 months, he is sitting on a loss of over 13,000. He's looking for a fundamental outlook on it. Mahesh, I'll direct this question to you. What's your outlook on the counter?
The counter is good. I think there's some upside potential is there, but from a mid cap and a small cap space, there is a supply concern is always there. So she should keep stop loss near I think 118, and upside potential could be a 165, 170 zone. There could be they can book profit. So from current perspective, they can hold the same.
Understood. Now we have another WhatsApp query. Satya Narayanan has written to us from Chennai and he's looking for a view on LIC because he's bought 840. He's bought it at 848 and IDFC First Bank at 74. All right. So he's bought two shares, LIC and IDFC First Bank. And he's looking for a 6 to 1 year horizon. So, Sarvendra, I'll direct this question to you. LIC and IDFC First Bank, which is more prominent according to you? What is your pick and what suggestion do you have for Satya Narayanan?
See, if I have to go, I will go with a bigger name. But the problem here is that, especially for LIC, there's very less data to look at. So long term is very, very difficult because the data is more so from 2023 itself, so and little bit of 2022. So around 18-20 months of data, nothing much on the long term can be done. But yeah, you can look at numbers where you look at key points. So I think around 700, 800 is the area where it consolidated last time. This time also, I think from around 700, 750 odd levels, there's some definite buying interest coming into the stock. So I would say that within the short term, you could look for pullbacks in the region of around 950, 980 on LIC. and more momentum and more vigor will only come once you go past the psychological 1,000 marker. So I think broadly I would say 750 to 980 is the range with a slightly upward bias on LIC. That is what I would suggest. So out of those two names, I think LIC is more clear to me. So I would say that stick with that.
Understood. So Sarvendra's pick is LIC over IDFC First Bank. And Mahesh, I'd like to take your fundamental view also. What what is your pick? Do you also hold the same view as Sarvendra?
I think LIC can go up to 1,000, 1,050 level. There could be investors who try to book the same. Or from a IDFC First Bank, if you're looking from a yesterday's LCR rules are positive for IDFC First Bank, and what we have seen last quarter result, that management commentary was also positive. So I think some upside could be there. IDFC first could be a 76, 78 zone, could be a come in 3 to 6 month horizon, then they should try to exit on the higher level. So we are not much more bullish on both the counter, but yes, some upside potential is there.
Understood. Thanks for that view, Mahesh. With that, we have a query written to us from Delhi. Mukesh Mohan Agrawal holds 350 shares of Tata Technology, and he's looking for a long-term view on it. He bought it at 849. So, Mahesh, I'll direct this question to you. What's your outlook on Tata Technology? Are you positive on the counter?
See, there is a view, if your view horizon is a 2 to 3 year above that horizon, then we can see some decent upside in Tata Technology. But currently, IT sector is not much more positive side from the particular sector. But yes, we are optimistic for some more upside. That could be a 950, 960 zone from a 1 year horizon. But if your horizon is more than 2 to 3 years, then we can see some more decent upside in Tata Technology.
Absolutely. The tech space is seeing, a lot of beating currently. So, Sarvendra, on that front only, if a new investor wants to invest in the IT space, so what are your top picks for short term, if you have any?
See, I would always go with the larger liquid names first and foremost. But when we comment on IT, I think it's better to look at the Nifty IT index itself. I would say that 32,000 on that marker on that index is a very, very good support area in the short term, 32,500, and we expect pullbacks in the region of around 36 to 37,500 into this move. So I would definitely think of this as a defensive space right now, defensive play, and I would if the market remains under slight pressure from here on, I think your defensive names might outperform, just for the fact that BSE IT has underperformed the market till now. If you look at the last couple of quarters, I think for the last 3-4 quarters we've seen underperformance coming in here. So I would play a pullback. Right now the index is around 35, so another 7 to 10% of upside on the index, and possibly on some leading names. So I would go, if at all I have to go, I will go with the leading names like Infi and TCS.
Understood. So Infi and TCS are top picks for short term in the IT space. That's what Sarvendra is suggesting. With that, let's go across to another query written to us from Kerala. Sumesh is looking for an outlook on Nesco for long term. So currently it's trading at 964. Mahesh, are these the correct levels to enter? And firstly, are you optimistic on the counter?
Yeah, he can hold Nesco for a longer term horizon. I think a 1,200 level could be a come in a 1 year horizon. And if your horizon is more than 1 year, then he can also hold the same. So I think Nesco is good counter, and he can hold further for a 1 year horizon. And for a 1 year horizon, 1150 to 1,200 could be a possible level for Nesco.
And Sarvendra, on the technical front, Nesco, is it positive?
See, I think does not come much in my filter. The reason being that it trades very, very few number of shares, on an average around 60-70,000 shares. That's the broad average here. So my sense is that indicators and technical parameters they would be slightly more skewed and slightly more erratic here. So I would like to pass this one because I don't cover it regularly.
Understood. No worries, Sarvendra. And viewers, just a quick reminder, please call us, on the numbers that are there on the screen, and also note the extension number, that is 9373. So please note that extension number and just call us right away. With that, we'll move across to another WhatsApp query. K. Ghosh has written to us from Kolkata. He holds 50 shares of Avenue Supermart at an average price of 3,744. He's accumulated these shares over last 3 years. So he's asking whether he can hold for another 1 year and what price is expected in this 1 year horizon. He is sitting on a profit of over 42,000 is what we can see. So, Mahesh, on the fundamental aspect of it, do you see any positive momentum there, and do you see Mr. Ghosh making more profits in the next 1 year?
I think yes, from current perspective, Avenue Supermart looking good. I think 4,800 could be a level first from these, if anyone holding from a 1 year horizon. Then after that, what we can see 5,200 to 5,400. So partial profit booking advisable on nearby 4,800. After that, what we can see some more upside. So from a 1 year horizon, we can see up to 5,250 level in Avenue Supermart. We have seen some more changes in Avenue Supermart. That is positive for stock. And expansion of stores are very good. So I think he can hold further.
And Sarvendra, if I look at the charts, it saw a beating during first week of March, and now it's in an upward trend. So what's your outlook on the counter?
See, when we go fairly long term and try and see what setups it's forming, so I think it's been in a broad, very broad range, and it's consolidating over the last now 4 years now. So the key takeaways from there is that it's always kind of stabilized around that 3,600 mark multiple times, right from 2021 levels, right? And the Ukraine high, that's a very important benchmark for the markets. So that last quarter of 2021, that Ukraine high for the stock was around 5,900. But broadly, if you go and look at monthly, quarterly charts, it's struggled at that 5,000 mark to close above on a monthly, quarterly time frame. You've not got many close above that 5,000. On a quarterly, I can see just like one tick, one candle above, slightly above 5,000. But broadly, it has struggled at around 5,000 3-4 times, and it has stabilized around 3,600 3-4 times. So that range, I think he should be trading, and the closer to 5,000 you are able to book some profit, you might get one more chance to re-enter at around 35-36. That's been the story for the last 4 years.
Understood. Thanks for that view. And I'm sorry, we are running short of time today on the show. But thank you so much, Sarvendra and Mahesh, for being on the show and, solving our viewers' queries so patiently. Thank you so much once again. And viewers, it's a wrap on Ask Profit today. But stay tuned to NDTV Profit as there's more lined up ahead for you all.
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS
Hi, thanks so much for tuning in. You're watching Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, you've heard of home loans. Of course, you've heard of home loans, but have you heard of overdrafts on your home loans? You've heard of fixed deposits. Of course, you've heard of fixed deposits, but have you heard of flexi fixed deposits? And you've heard of mortgages, that is, home loans, of course. But have you heard of reverse mortgages? We're going to discuss all of these in more details, and we have a couple more nuggets for you on this show as well. This show, of course, gets you insight into everything personal finance. But to talk about those first three topics that I mentioned, let me introduce my first guest. We've got Adil Shetty, who is the Chief Executive Officer of bankbazaar.com. Adil, thanks as always for taking the time. Let me start with that first topic, which is the overdraft facility on home loans. For the uninitiated and those that don't understand, myself included, can you explain what this means?
Sure. It's a name we've always heard, which is the home loan overdraft facility, but I had to do my research before I came on this show. So essentially, it's an account where you can park your surplus funds, and that is connected to and set off against your outstanding home loan principal. So let me just explain this with an example so you can understand the benefit and you can also understand what the catch is. So let's say you have a 50 lakh home loan outstanding, and let's say you take a home loan overdraft facility and you have 5 lakhs in extra funds and you put that 5 lakhs in that overdraft facility. Your principal is considered to be 50 minus 5, or only 45 lakhs when the interest is calculated on your home loan. So you get the benefit of your surplus funds reducing your outstanding home loan principal. But Alex, there's one catch. You typically end up paying 0.25% higher interest rate if you take a home loan overdraft facility. So let's say a regular home loan today is at 8%, right? And with the repo rate falling for the very first time, we're going to start to see home loans below 8% in India in the last 5 years. For your home loan overdraft account, you're going to end up paying a 8.25% interest. So that's the catch you have to watch out for.
Okay. And obviously, there are significant benefits to prepaying your loan. How does this compare to a prepayment of a loan? Because like you mentioned, there is a higher interest that you're paying, but one would assume that if you have a sizable amount that you park in this overdraft facility, it reduces the principal as you explained, and so therefore the interest cost should dramatically reduce, right?
Yeah, so like with everything in life, there's a give and a take with every choice we make. So what happens over here is that in a prepayment, your outstanding principal immediately gets reduced. In fact, we aggressively advise, we say if you have money, excess money, always prepay your home loan, right? And the classic example, Alex, is if you just prepay 5% of your outstanding principal every year, a 20-year home loan is done in 12 years. Now, the difference between this overdraft, right, is once you prepay, you can't ask for that money back, right? So let's take the example we're working with. I have 5 lakhs in surplus, right? Now, I put it into the overdraft account. Now, if I want the 5 lakhs back, if that was a classic prepayment, the bank is going to say, hey, you prepaid, I can't give you 5 lakhs back. But with a home loan overdraft facility, now that 5 lakhs is now available for me to take out if I want, and my home loan balance will go back to 50 lakhs. So this kind of product works well for people where they have a lot of money moving in and out of their account. They don't have time to move this money into a classic fixed deposit. And keep in mind, you're using this excess capital to reduce the outstanding principal on a home loan, and the home loan overdraft is at 8.25%, while an FD would have earned you just 7%. So there are certain advantages, but like with every decision, there are certain disadvantages. So the advantage is you have liquidity, so you can take that prepayment back, which you can't do with a classic prepayment. But the cost is, instead of now paying only 8% on your home loan, you're now paying 8.25%.
I can see some potential advantages here, Adil, in that you are often told to keep an emergency fund, and if you have a pretty large mortgage, as a lot of people do, you can actually use this as your emergency fund, because you're not talking about buying your groceries using this overdraft facility, right? You're looking at parking your excess funds, stuff that you don't need immediately. So is that an appropriate use of this facility?
Yeah, that's a great use of this facility, Alex, because if you just take stick with the example we're working with, you have a 50 lakh home loan and you just put a 5 lakh emergency fund on the overdraft, right? Even with the difference between 8% and 8.25%, you might be better off, right? With the overdraft facility. But I think the devil is in the detail. So, you need to see exactly how much money you can set aside, how much you're deferring. So I do believe there are certain use cases, but it's a fairly involved calculation that needs to be done person by person.
Last couple of questions on this subject, which is, can you opt to change midway through a normal mortgage into this overdraft facility, or is it a completely separate product that you have to migrate to? And second, if you have this overdraft facility, Adil, can you prepay that loan?
So on the first point, this is a different facility. So like I said, it has a different interest rate, it has different terms and conditions. So it's set up as a different facility. You can always refinance from one to the other, but that amounts from moving to one account to another account. In terms of prepayment, yes, you can choose to prepay, but that's done as a classic prepayment that would happen on any loan. And that prepayment won't be available. That liquidity would no longer be available to you, Alex.
Okay. No. So the question was, let's talk about an example, right? We talked about 50 lakh loan or principal. You're saying you're parking 5 lakh in this overdraft. So to that extent, your interest is charged on a principal of 45 lakh in this case. But you have, say, you get a bonus of 2 lakh rupees and you say, you don't want to park that as well into the overdraft facility. You want to reduce your principal by 2 lakh in a shot. Can you do that?
Yes, you can. So you can choose to prepay also independent of the overdraft. So that standard facility with a home loan, you could choose to use.
Okay, so fantastic. And I think we've talked about the pros and cons of both. You need to review what works for you. And it's a simple mathematical calculation, I think, that you can go through because you will be paying a higher charge, as Adil pointed out, for the overdraft facility. Speaking of flexible products, though, in the context, Adil, of a lot of banks out there recently announcing that they are cutting their savings bank account rates, quite a few of the frontline banks are now offering anywhere between 2.7 and 2.75%. So we've just discussed on the show very recently that leaving money in your savings bank account is criminal at this stage. From that perspective, is a flexi fixed deposit, which is or a sweep in, sweep out fixed deposit, is that something to consider? How does it work?
Sure, Alex. So let's see how it works, and then I'll tell you what we're recommending to consumers. We see at Bank Bazaar looking at this facility, right? So the way it works is as follows. Like you said, repo rates have been cut. So banks, and several large banks have now cut their savings account rate to 2.75%, which is below the inflation rate that we're seeing today. So the way the facility works is the account you set up, and this varies bank by bank. So you can check with, or you can research online to see which bank you want to go with. The bank will have a certain level above which, right, the sweep out will work. So that means sweep out, typically, let's say a bank will say it works at 40,000, 50,000, 60,000. So that essentially means until that level, the money will stay in the savings account. But above that level, the money will be swept into a fixed deposit. That's point number one. So you need to check what that level is with the bank, because there's some banks which have it at 30,000, there's some banks which have it at 1 lakh. And often, right, it's not a number you can choose. So that's the first metric. The second metric, right, is once you have more than that amount, and for our example, let's work with 50,000 being the sweep out level, every 10,000 chunk, right, the bank can say, I will package into an FD, right? Now that metric can be 10,000, 20,000, 30,000, but let's assume that the bank you're working with offers it at 10,000. So let's say you have 70,000 at a certain point of time in your bank account, automatically 2 10,000 packets of FDs will be automatically set up as part of the sweep out without you having to do anything. Third point, right? Depending on how long you leave the FD, you will earn the FD interest rate that the bank offers. So let's say the FD remains with the bank for 30 days, you earn the 30-day FD rate. If it's there for 1 year, you earn the 1 year FD rate, and there is no penalty for breaking the FD. So unlike a standard FD, when you break it, you don't pay a penalty. You earn the FD rate on however long you kept it, 30 days, 90 days, 1 year. And what happens is when your savings account falls below a certain level, then the FD is broken and brought back into your savings account. So this is a really nice facility for people who are not in the active process of, let's say, moving their money into SIP or into index mutual fund. They just want a facility wherein they know, hey, if my savings account is over 50,000, I want it to go into an FD. Very often at Bank Bazaar, we see that people don't do this on their salary account because your salary account goes high at the start of the month, and if it's anything like my salary account, it falls pretty quickly. So then you have FDs being set up, FDs being broken. So you typically want to do it on a separate account wherein you park your excess cash, and there it sort of makes sense because you move the money in, it gets set in an FD. You might keep it there for 60 days, in which case you earn a lower interest. You might keep it there for a year, in which case you earn a higher FD rate. And if you break it, there's no penalty. So it's a very good product in that sense, Alex.
Okay, that's interesting. And, I also want to talk about what we discussed just yesterday, if I'm not mistaken, on the show, just earlier this week, Adil, which is we were talking about the fact that this interest rate on the savings bank accounts has been cut. We're talking about the fact that if you are using, and we talked about the emergency fund, which a lot of people keep, right? And a lot of people do keep it in their bank accounts as well, just purely because it's lazy money, I guess, or it's just simplicity. But then we talked about whether or not a liquid fund in a mutual fund space or an arbitrage fund, again from the mutual fund space, can be used instead. But the sweep in seems to be something to consider, particularly for those that are not necessarily in the top tax bracket, because in the top tax bracket, you'd be paying 30% on interest. Is that the way that you look at it as well?
Yeah, that's a good point. So you could, consider it for a emergency fund. But like you said, the catch is, right, in a liquid mutual fund, for example, you have the same context of liquidity, right? So you want your money immediately, you get it. The tax advantage, however, right, is in a liquid mutual fund, depending on when you sell, at that point, the tax becomes incident. The thing with an FD is the tax becomes incident as soon as you get paid the interest. But, the way you just summarized it for me, I really liked, Alex.
Okay, yeah, and also your capital gains is worked out in a mutual fund in terms of first in, first out, right? So you're not paying the entire tax at one go, and you pointed out that very well. So it is an interesting product. Again, pros and cons, wait as you will. Do consider the other options available as well. We just discussed it. Perhaps you can go and check out the conversation we had earlier in the week. But Adil, the last point that I want to talk to you about is, on the face of it, it sounds like an interesting concept. And this is reversed mortgage or reverse mortgage. It's something that is seemingly more prevalent in places like Europe, in places like the US. And ultimately, the concept is that you have a house, you own it, you basically are taking money from the bank. The bank is paying you an EMI over the course of a particular period, and at the end of that period, the house goes to the bank. Is that how it works?
I think that's a fair summary. At the end of the period, you owe the bank money, and you have a choice. You can either pay that outstanding principal and get back your house, or if you don't have the outstanding principal, then the bank will dispose of the house and pay the difference back to the people who are inheriting. Let's just work with the example here, Alex, because that's what I find really helps our listeners get the concept. So let's say you have a 1 crore house, right? But today, reverse mortgage rate in India is about 11%. Now, keep in mind, 11% versus 8% is different, right? 11% is what you pay as interest on a reverse mortgage. 8%, right, is what you pay on a home loan. So it's fairly expensive. And one could say it's a product that, though very, very popular in America, and, who knows, right? I do believe, like you said, and we have, discussed this also at Bank Bazaar, that as people, start staying by themselves in their old age, as they need annuities, this might become popular. So anyway, here's what happens. You tell the bank that I want a reverse mortgage on my 1 crore property. The bank firstly will say, okay, there's an LTV I can underwrite. The LTV is about 55%. So they're saying that,
let me stop you there, just so that we know what everyone knows what we're talking about. LTV is loan to value. Adil, just to drive home that point, to give you an example, if you were to go for a mortgage loan today, a home loan today, the home becomes the underlying security that is hypothecated to the bank. The bank essentially is using this as collateral. And you don't get the entire value of the house as a loan. You get a percentage of the value of the house as the loan, and that is called the loan to value. Adil, apologies for interrupting you.
No, that was a great clarification, Alex. So on a reverse mortgage, typically the LTV being offered in India is about 55%. Some of the leading banks are offering a reverse mortgage at 11%. Now, this is the exact opposite of a home loan. And allow me to express it this way, right, which listeners will find very interesting. This is like the bank paying you a monthly EMI. So rather than you paying the bank has hypothecated your property and is paying you every month. Now, if I have a 1 crore property and I have a loan to value, which the bank is willing to build up of 55 lakhs, essentially at 11% for 20 years, right, the bank is willing to pay you 6,000 rupees per month. Now, as 6,000 rupees per month accumulates at 11% interest, at the end of 20 years, this becomes a 55 lakh outstanding principal that the bank has given you. So this is the way the product works. I can give my 1 crore reverse mortgage to the bank. I, as the bank, will say, great, I have your security. Please take 6,000 rupees every month, which I'll pay into your account. You are going to pay me 11% reverse mortgage rate. At the end of 20 years, right, I've extended you a 55 lakh loan. Oh. Now you pay me the 55 lakh loan and I'll give you back your house, right? Because your house, which was 1 crore when you reverse mortgaged it, could now be worth, I don't know, 1.25 crores. It could be worth 1.5 crores or whatever it might be. But if you pay me my 55 lakhs back, you get your house back. So that's how the product works. There's an interesting comparison, but I'll just pause here if you have any questions. And then I want to tell you what would have happened if you sold your house and put that 1 crore in an FD.
Yeah, no, I mean, it sounds like a not so good deal, Adil, let me be honest. It sounds like somebody's going to get the raw end of a deal right now. Why would I go for that? It's 6,000 rupees for a 1 crore property that will become the bank's at the end of 20 years. That sounds like a bad deal.
Yeah, see, this product is not very popular in India. It's also not very competitive, right? So does it need to be 11% interest rate over time? Will we see that come closer to the home loan rate of 8% currently prevailing? Let's see. But I'll tell you why I do agree with you, Alex. And let's explore this a little further with some examples that, we've calculated at Bank Bazaar. So what we find is, let's say you took this 1 crore and you put it in an FD, which is paying you a 7%, right? And I'm talking about pre-tax here. Let's assume you're in a lower tax bracket, you're a senior citizen, because typically for a reverse mortgage also, you're at least 55, if not 60. Now, your monthly earning, Alex, is 58,000 rupees per month on that 1 crore FD. So now Alex is asking me, saying, Adil, why would I take 6,000 rupees a month instead of earning 58,000 rupees a month on that FD? That's your question, right, Alex? Yeah. Can I proceed to answer?
Please do, but that implies, Adil, that you're selling the property.
That implies you're selling the property. So you hit the nail on the head. So let's come point by point, right? So point number one, right, essentially I've sold the property, all right? So I don't own that property and I have no way of owning the growth in home equity in that property, because in 20 years, that 1 crore property can be worth 1.5 crores. I have no party to it. The property is out of my hand. Secondly, right, now I have to rent, all right? So let's just add the rental value, Alex. So a great, rental yield would be a 4% per annum. So let's say I was renting out a property of 1 crore. I'm probably going to be paying about 33,000, which I'm now going to shell out. So from my 58,000, you have to net out the 33,000 and you have to net out the 6,000. But still, right, I'm making significantly more, right? So let's say I'm making, about 20,000 rupees more than I was making with the reverse mortgage. But to the final point, right? Because everything in life is a trade-off, Alex, and there's no free lunch.
Yeah.
The difference here is at the end of the period, I have my FD of 1 crore. I don't have my property with its appreciation, which I would have had access to, right?
I wanted to discuss, let me be clear, I wanted to discuss this as a concept that might eventually come to the fore. We're hearing every day people are not having children, right? And while DINK is a concept that a lot of people are gravitating towards for various reasons, there are implications of that as well. And I guess that is a conversation for another day. Thanks so much for joining me on this program. Pleasure having you.
My pleasure as always. Thanks, Alex. Great question.
All right. So there you go. So we've got products that are available. Not all of them are going to be useful to you. And that, I guess, is the sum and substance of today's conversations so far. Now, speaking of new products, there's one that you should know about, particularly if you have a kid or a child that is around the age of 10. The Reserve Bank of India has now said that your children will be able to operate soon bank accounts of their own without the need for a guardian to be present or to oversee anything. It sounds like they're going to have complete ownership of a bank account. So they'll be able to theoretically go and swipe for purchases. How does that work? Yukta has more.
When we were 10, we were collecting Pokemon cards and figuring out polynomials. Now, kids are going to start collecting interest and learning practically about FDs. Thanks to a big move from the RBI, banking just got a lot younger. The Reserve Bank of India has announced that minors over the age of 10 can now open and manage their own savings accounts and even fixed deposits in some cases, independently. That's right, no parent signature required. The idea is simple. Get kids comfortable with managing their money early on and make financial literacy a part of the school experience. Now, depending on the bank, these young account holders could even get access to debit cards, internet banking, and checkbooks. Now, not every 10-year-old is going to be swiping cards at the store just yet. Banks will still have the discretion to decide what's age appropriate for each child. But it's a big shift from the past when minors had to rely on parents to manage their finances. Now, reportedly, the banks are also directed to ensure that the bank account for minors, irrespective of whether it's operated independently or through a guardian, will not be allowed to be overdrawn and that there should always remain a credit balance. For those under 10, it's business as usual. Parental control will still be in place. But banks have until July 2025 to fully implement these guidelines, and while some are cheering this move for financial empowerment, others are asking, should kids this young really have that much control over their money? At the end of the day, this move could set the stage for a more financially aware society. If kids learn how to budget, save, and plan early, they may grow up with a far more responsible and efficient relationship with money.
Interesting. So don't be surprised in a few months if you see a 10-year-old swiping a card at a mall. But what do you think about that? Do you think that your kid is going to benefit from something like this? We've got a social media poll running currently. Why don't you go and check that out and weigh in and let us know what you think. Now, we've been speaking about gold prices and the fact that they're very close to all-time highs, but we haven't spoken enough about silver. There's an interesting phenomenon that is at play. There's a gold-silver ratio. And in fact, the gold prices have gone up, but silver prices have not. What does that mean and what could happen? Mahima has this report.
Right, so the real question right now is whether to invest in gold or silver right now. Now, just to put this in context, gold is trading at $3,319 per troy ounce, whereas silver is standing at around $32.81 troy per ounce. Now, normally the gold to silver ratio is 1:70, but right now the gold is to silver ratio stands at around 1:103. And now, in terms of 6 months view, the low of this ratio was at 1:80, signaling that there could be a potential correction that might be on the horizon. Now, here's what driving the trend. Overall, in the past 6 months, gold prices have risen over 25%, whereas silver has been down by about 2% during the same period. Both these precious metals function very differently in terms of market performance. While gold is being seen as an asset, silver is often viewed as a trading commodity as well. Silver plays a significant role when it comes to industrial applications, currently silver industrial demand has taken a hit, which is why the overall price of silver has been impacted in the past 6 months. Now, many experts also believe that gold to silver ratio could correct itself soon, which means that silver prices might go up and at a higher pace as compared to gold. So this is the overall view as to everything that one needs to consider before investing in gold or silver.